personal income tax brackets, and they were announced in the 2026 budgets. Many may be expecting some welcome relief, but the April payslip may tell a very, very different story. Essentially, while the 3.4% adjustment to tax brackets aligns with inflation, there is more beneath the surface, as the tax relief is often cancelled out by the rising costs. Tanya Tosen is a tax and remuneration specialist at Tax Consulting South Africa. Joins us on the line. Welcome, Tanya. Great to have you with us.
Thank you very much for having me on the show this morning.
I think we should just go through some of the issues and then just maybe find out more about how that's going to reflect on our pay packets. Let's look at the tax-free threshold under 65. What is that, and what does that mean?
Right, so the tax-free threshold under 65, apologies, at the moment is 99,000 Rand for the 2027 tax year. So the tax year is obviously started from the 1st of March, which ends in February next year. So what that means is essentially if your taxable income falls below 99,000 Rand, because we get an annual rebate of 17,820 for individuals under 65 years old, essentially you have a zero tax liability.
So, okay, under 65, if you are earning up to 99,000 Rand per annum, there's zero tax liability.
Correct.
And that's up from 95,000-ish.
Correct.
Okay.
Correct.
Let's talk about a primary rebate. Explain to us what that is.
So the primary rebate is exactly what I've explained. And then when you are 65 years and older, if you turn that age within the tax year, you get an additional rebate or the secondary rebate. And then if you're 75 years and older, you get a tertiary rebate in addition to the primary and secondary rebates. So essentially your tax threshold is different depending on your age.
Okay. So I'm just reading that it's increased to 17,820 Rand. Where does that apply? Who does that apply to?
So for every individual or employee in South Africa who's earning a salary, this is already factored into your payroll. And basically, in essence, what that rebate does is it reduces your annual tax liability. So last year it was 17,235 Rand, and it's moved to 17,820 Rand. So giving us slight relief.
Yeah, negligible. Yes, indeed.
Yes, absolutely.
And I can see how where the concerns are that the inflation has eroded whatever benefits that, will accrue to us. Let's just also talk about medical scheme fees, tax credits. How are people going to be impacted there?
Yes, so even though the medical aid tax credits were increased, realistically, if we look at the Discovery medical aid contributions, with Discovery being the main service provider providing medical aid across South Africa, their contributions increased from the 1st of April. And they published that most of the schemes will increase between 7 and 8% on a monthly basis. So the essence of this is that even though the tax tables gave us relief up to 3.5% or 3.4%, realistically that's been totally wiped out with our medical aid increases that are effective now. And in addition, in saying that, realistically, what people don't realize is over the past 2 years where the tax tables weren't adjusted for inflation, what that means practically is even individuals who were below the tax threshold, never paying taxes, have been pulled into that tax net, so are feeling the pinch. I've often spoken about this last year in radio where people have received increases and they go to the shops. We see the cost of living increasing and they say, but my increase is worth nothing. So realistically, what they don't understand is when you break down the mechanics of the tax table, part of that increase might have pushed them into a higher tax bracket and therefore eroding part of that increase, or you've been pulled into the tax net as well. So it's that classic case of we're all being pushed into higher tax brackets, But then, even though we're getting this small inflationary relief, it's constantly being eroded by medical aid and cost of living.
I got you. So we've got a tax fundi with us, and you may want to chat directly to Tanya Tosen, tax and remuneration specialist at Tax Consulting South Africa. You're welcome to do that via WhatsApp on 072-567-1567. You can call at any time on 021-446-0567. I know that there's some adjustments to the retirement and two-part system. It's the second year of the two-part retirement system, is it not? And are there changes to it?
Yes. So, look, SARS and the Minister of Finance made multiple changes this tax year, which was actually a wonderful tax relief. So also encouraging South Africans to save. So previously we were allowed to deduct up to 350,000 Rand per annum for retirement contributions. They have now upped that limit to 430,000 in the current tax year. So they are encouraging South Africans to contribute more towards their retirement fund and getting that tax break. But there's a bit of a double-edged sword which comes with that because of the two-pot system. So, there's no point people pushing money into the retirement funds and then extracting it and having that taxed at their marginal tax rate with the two-pot system.
Brandon wants to know, are all taxis paying South Africans eligible for the tax rebate?
Are all? Sorry.
Are all taxis paying South Africans? Sorry, I know I'm not making sense of that question, but it's via WhatsApp. Sorry. But
yes,
you were also drawing my attention to something. And we will go there in a short while. A business is going to find some relief, especially small businesses around VAT registration. Tell us about that and turnover tax as well.
Yes, so again, more relief. So the VAT registration limit was changed from R1 million. So now you're only required to register for VAT if your small businesses, your turnover exceeds 2.3 million Rand. So that's a massive one because, if you look at when this was last amended, it was last amended in 2009, which also is a very, very long time if you look at how our money has devalued over time. So that has been a positive change for small businesses as well.
We got a voice note. I think that was the message. Let's take a listen to that voice note, Joe.
Hi there, Clarence. Thanks for a pretty good show this morning. Please could you ask your expert why inflation is measured at 3%, but real inflation, which we all pay in terms of insurance, medical aid, way exceeds that. So how can the government justify claiming that it's, for example, 3.1, 3.2%, when the real cost of living inflation is way, way above that? Thanks, Philip.
Tanya, your response.
Yes. That is a fantastic question, and I fully agree with the listener. If you look at, the government and the Reserve Bank, when they do their analysis, they generally base this on a basket of goods where they look at CPI and they pin it at that 3.4%. But I fully agree. If you just take single line items, which are massive costs, even if you take the cost of electricity, which is going up soon at a 9% or close thereto, with medical aid, I have to fully agree. I don't ever see experts saying it's way above, but obviously there's bigger economies of scale here in the picture. And I'm not an economist, unfortunately, but this is what has been published. And I fully agree with you. When you go to the shop, you go purchase food and your basic needs, you definitely are not seeing an increase of 3.4%.
And you can't argue with a shopkeeper.
No.
Christopher wants to be absolutely sure that he heard you correctly. He writes, am I correct in concluding that the 17,820 should be added to the primary rebate of 99K?
No. So the rebate, as I explained, it actually reduces your annual tax liability, right? So So if, as an example, if I earned 100,000 for the year, I fall into the 18% tax bracket. My annual tax liability would be 18,000. We would reduce that if I'm under 65 by 17,820 for the current tax year. So my annual liability only ends up being 180 Rand for the year. That's how the rebate system works. And this is actually already programmed into payroll systems when you receive your monthly payslip.
Okay, now let's just have a look at, we still have about 3 million people. So it's about approximately 3 million personal income tax paying people. Is that the number?
I think it's a little bit more than that, but realistically, when you look at the breakdown of your individual taxpayers, what is concerning is that a lot of those individuals fall below the tax threshold.
Yeah.
So if you look at the statistics, there's a heavy tax burden on your higher income taxpayers. Those are the individuals who earn above R1 million, and 2 million and 5 million. They're carrying the lion's share when it comes to your personal income taxes. So if you look at the numbers, right, there's about 6 million people who fall below the tax threshold. That's below that 99,000 Rand. And all the number of taxpayers actually carrying the can in South Africa projected for 26-27 is 8.3 million.
That's
taxpayers.
significant. Okay, carrying the can.
Yeah. Yes.
I got you. So that number of 3 million is erroneous. Now let's go to talent and global mobility, because that's the nature of economics these days. Talent is mobile. They go where they wanted, where they loved and paid well. These bracket adjustments, do they do enough to curb a brain drain or even migration of high net worth taxpayers?
Absolutely not, Karen. Immigration stats recently that were published by the Migration Profile Report that was released recently over the last 2 decades, over 1 million South Africans have left South Africa, and 43% actually indicated that they'll never come back. And what's most concerning is most of those individuals leaving South Africa have qualifications or additional postgraduate qualifications as well. So these inflationary adjustments, they are welcomed. I mean, we shouldn't be ungrateful for small mercies, but realistically, is it enough? Now, as everyone is rushing and panicking to fill up their tanks today, there's going to be a much bigger pressure system put on each individual in South Africa.
Let's take another voice note, Joe.
Terence, regarding the tax relief for small businesses, a question that we have is, say, for example, you bought produce or products in the tax year where you were still paying VAT and you now qualify for VAT deregistration. How do you do the VAT, no VAT, as far as when your tax return goes in? Are they just absolving you of then declaring that VAT on things that are overlapping in the tax year that you might be using in the new tax year? Or is it a bit more complicated? Thank you. Sure.
Tanya, your response?
Karen, it's quite a complex question. I would recommend the individual reach out to us. They're more than welcome. Our company is called Tax Consulting, and I can put them into contact with a relevant VAT specialist. Because unfortunately, in the tax world, we are all specialists in our own right on certain areas. So I'm not going to unpack that in too much detail, but they're really more than welcome to reach out to us, and we will support them on that matter.